Hi, I'm Jarrad Brown, Australian expat financial planner based here in Singapore. Thank you for tuning into my video today. What I want to discuss in this video is the skyrocketing insurance premiums that we're seeing amongst many insurers in Australia at the moment, and what Australian expats should be thinking about when it comes to reviewing their coverage. So in this video, we're going to cover exactly what's happening in Australia, how insurers make money and why that's important for you to be aware of, and of course, what Australian expats should be thinking about when it comes to reviewing their insurance. So let's dive right in. So first and foremost, what is actually happening? Well, in very simple terms, insurance premiums, that is the amount that you pay for your coverage in Australia, have been increasing quite dramatically over the past few years, but we're seeing some huge increases over the last 6 months. And now here we're specifically referring to personal insurances, life, total and permanent disability, income protection, and trauma or critical illness cover. So we're not referring to health insurance here. That is a completely separate topic and very much a different form of insurance. We've just seen some announcements recently that came through at the beginning of this financial year in Australia, where some income protection premiums were increased by 119%. And that was for long-term income protection with one of the major insurers in Australia. Not unique at all, we're seeing similar increases across a lot of them. So why is this happening? How do insurers make money? And what can we do about it? Now, when we think about how does an insurance company make money and why are premiums increasing? In very simple terms, an insurance company will receive the premiums that you pay for your coverage. They need to generate some form of return on that money, but naturally it needs to remain relatively liquid in case of a payout. So a lot of this money will get invested in low risk assets, bonds, money market securities, cash, term deposits, very low risk, typically low volatility style investments that usually will generate a lower rate of return. Now, over the last 10 years where we've been in a very low interest rate environment, naturally the returns to those insurers have been quite poor on the money that they've been investing. That, coupled with increases in payouts, naturally means that insurers' profitability starts to become more concerning. How do we recoup those losses or those reduced returns? We need to increase our insurance premiums. And that's part of why we're seeing such drastic increases in the premiums in Australia. Now, if you're an Australian expat, this could be coverage that you still hold in Australia, either inside or outside your superannuation. We know that Australian expats simply ignore their superannuation when they're offshore because you're not contributing, so who cares? However, this is not the right response, not the right strategy, the right path to take. It is still your money. Chances are it's going to form a valuable part of your retirement strategy. So let's have a look at what you can do to start to reduce the burden of these insurance premiums. So what can we do to start to reduce this burden? Well, first and foremost, review how much cover you have and how is it owned. So here you should be looking at who your insurer is, what the total amount of coverage is, that is the amount you would receive in the event of claim. Review how much you're paying, how much it's increased by if you are on either a stepped or a level premium policy, at what age it will expire, and also make sure that if you are living offshore as an expat, that it does actually cover you whilst you're living offshore. Because we know there are a lot of insurers that won't cover you whilst abroad or would require you to move back to Australia in the event of a disability or a terminal illness claim. So make sure you do your homework here. That is always a good starting point to have a bit of a list of exactly what coverage you've got. Make sure you have an idea also of what coverage your employer is providing, particularly if they are providing you with some coverage. So that's step one. Now, step two, once we've got that list together, is to have a look at, well, do we actually have too much cover or perhaps not enough? You may have taken out your life cover, your disability cover, when you had a higher mortgage, when your children were younger, so there were a lot more school fees ahead, and those amounts may now be able to be decreased. That may result in a saving and allow you to save a bit of money and cut those premiums. You may also want to review whether you can simply change insurers, and that's something you may be able to do in Australia with your broker or with your financial planner on the ground in Australia to review your options. I would also certainly suggest that you consider reviewing your options in your country of residence. So obviously sitting here in Singapore at the moment, we often find that a lot of the Singapore insurance premiums may in some cases actually be substantially less than the Australian premiums for that same amount of cover. So make sure that you review your options here. A lot of the insurers in Singapore will offer Australian dollar coverage and will offer global coverage as well. So even if and when you move back to Australia, you may find that that level premium policy you took out in Singapore still remains a very attractive option. So review your options here. Don't simply bury your head in the sand, because why pay for something that we don't need, or why pay more than we should for something that we do? So it's a great time to review your insurance, particularly after the increases that we're seeing. Review your options, seek some advice, and save money wherever you can. Thank you for tuning in. If you have any questions on your insurance, whether it be in Australia or outside, please do drop me a note in the comments, reach out to me directly. Please remember to like and subscribe the video. Thank you very much for tuning in, and see you next time.